Hello everyone, long time no see. Sorry for being a little bit absent of the streams for maybe a month, I think. Today it'll be kind of a quick update, considering that we are inside internal liquidity, so there are some levels to look out for. But until we see very specific reactions, I don't think we can safely predict where price might go. There are some levels as to, depending on what happens on each of the levels, I think that then we can make a safe assumption, or better yet, a more safe assumption. And currently right now I have everything on the chart that I'm going to talk about, which as a consequence is kind of messy, right? Kind of confusing, but I'll try to go over them step by step, and I think maybe the best option right now is to talk about what happened for this. Oops, sorry, change charts. What happened for this drop to happen, and what does this reaction might mean. So yeah, let's get over with that first. Let me just hide mostly everything that we have currently on the chart, and let's go back to the weekly time frame. So first things first, we as you know, we broke the all-time high. The current high is now sitting at 69,349 on the MXC exchange, but we broke that all-time high, so now we are looking into either signs of a correction, a reversal, or a continuation, because this is just the first step. And we have several fair value gaps. I mean, I'm talking about weekly fair value gaps that can be that haven't yet been minimally touched, so they're all untapped for now. First of all, I think that if we are to go for a higher move, I wouldn't like price to go much further below than this final fair value gap, this third one here. Main reason being that overall this is a support and resistance zone, has been for several examples in the past as a more macro structure, right? This zone over here. Whenever price went through this zone, it had trouble getting either above or below it, and breaking below it, it then retested some levels on it for a continuation. So if we are to reach higher levels, I think this would be kind of like the final threshold, unless we are basically creating a gigantic range, which also would be very, very unlikely in my opinion. So one of the things that are one of the confluences that I'm looking at is the weekly levels that we have. They're essentially just three, and they are kind of like the support and resistance zone that I was talking about. There are support and resistance flip zones, meaning that they are levels based off open and closes that were naked for a while, naked being that they were untapped for a while. So this open and close of this weekly, these 2 weeks, it was left untouched for a long time, and when we actually broke that level, it was with a gap. Coming back to it, we retested it and then made a new all-time high. The same thing for this level now. I'm expecting this level to be very local support right now. for us to have a continuation, or if we go below it with some power, I expect it to serve as resistance later. As such, the level at 58 to 30, which is from May 2021, is also one of the levels that I expect to serve as a support. So as is 5766. These levels essentially did already do its job, in the sense that, for example, this level at 50k, when we did break out of it, the next week we reacted several times to it. It served as a support. You can clearly see it right here. And the same thing for this level. And now this level is also currently serving as support. So that's one thing. Another thing is the same logic, but going to the monthly level. We have two levels only that are basically following the same rule, the same logic. Let me just put this one with more vibrant color so you can see better. There is this monthly level and the nearest one to the all-time high. Both of these should also be some kind of a support, especially now considering that when we had this massive drop, not only was it relevant for this consolidation over here, but it was also relevant for this considerable drop that we had. Now, taking the opportunity that I'm talking about this drop. This drop is kind of bullish, for the simple reason that when we were going up, all of this essentially was a liquidity curve, because it almost took no liquidity, grabbed no liquidity before moving up. So essentially this drop was basically like a purge of everyone who has longed basically too late, right? And tried to hold on to their positions. This is very healthy. However, the low that was created here, this is essentially equal lows, and this basically means that we have a very big amount of liquidity here waiting to get grabbed. That tells us that if we do catch a short, either from the all-time high, or maybe, for example, from a liquidity grab of this curve over here, those equal lows are a possible target. And if we do close, for example, a 4-hour candle below the equal lows, then it becomes a lot more probable that we can go for either the weekly and daily level that I was talking about at 50k, or the monthly level at 45k. This would be an enormous drop, but it would also take us to probably the best support line that we have, because this is a very, very big consolidation range, all of this, right? Where we had the last, we can call this a market maker program, right? A very clear sell program converted into a buy program. And in this case, this is probably the strongest range that we are going to have, and probably the last chance of a continuation for a bigger all-time high than the one that we have here. That being said, let me just delete this. That being said, there are some interesting things here based off of Fibonacci deviations. relating TR pockets. So for example, first of all, when we did reach the all-time high, we had a massive drop, and the first time that we really stopped to make a bigger pivot was this point. And if we draw a TR pocket, which essentially is just a Fibonacci tool with these deviations, we can see that we not only reacted to the value area high of this consolidation, value area low, sorry, of this consolidation, as we also did react to the 618 deviation. Typically, when a TR pocket has an SFP type reaction to one of the deviations, our common target is to go to the middle of the range, so the 0.5, which is where we are now, and we are consolidating here at the moment. If we are to then have enough power to continue for another deviation, these are my current local targets, so 71k, very near 71k, or near 73k. I'm inclined to 71,250, just for the simple fact that high block tells us that we have a 100x high block liquidation level there. So that would mean that a lot of people would get liquidated reaching that level, and price has a very high tendency to go for liquidation level, so this is one of the targets. From the same point of view, when this drop ended, if we do another TR pocket to its correction, we can also see that price very perfectly reacted to the 6,900 level here. Kind of perfect reaction, kind of perfect tap, and it is possible now for two things to happen. The first one is that it is very likely, since we created equal highs over here, it is very likely that we might come back just for this liquidity as an SFP and then start going down. Also because on the 15-minute time frame we also have equal lows here over here. Also, those equal lows didn't grab any liquidity before starting to move up, which indicates to me that, for example, this as a range will probably not serve as a good support, especially considering that just below it we still have several high block liquidation levels, but we do have our monthly level there, and if we draw a normal Fibonacci to the current high, so the low to the local high, this is where we have our preferred region to trade, right? So the golden pocket 618 down to the 786 level, which is in line, pretty much in line with our monthly level. So this is a high confluence zone that I'm very much interested, and that would also mean reaching a zone where a lot of probably trapped traders are at the moment. Whoever shorted here is pretty anxious to try and get out. So the bias for the moment is to wait for a liquidity grab of any of these highs, preferably those equal highs over there, see any reversal signs, maybe a change of character in the lower time frame with a divergence, and if we do get that, the idea is to short and target at least these equal lows. There is a possibility as well of us doing the other way around, for the simple fact that if we look at the 4-hour, this drop here, this candle here, reacted to the the 50% level of this fair value gap in the 4-hour time frame. But during the Asia session today, we created, let me just pull up the sessions. So this red zone represents Sydney and Asia together, and we have the Asia low here. If we draw TR pocket, we can see that we are currently reacting to the 618 level of that AG range, which should at least take us to the 0.5 level, the middle of the range, and possibly also take us to one of the other deviations. If it doesn't do this, so I'm not taking any trades just because this is not a liquidity grab, any trades from this just because this is not a liquidity grab that has a higher confluence. So I'm looking that either it takes out the New York low, which is this low over here, or it comes back down to grab the London low. If it happens with an SFP and the divergence, I might shift my idea into thinking that we are going straight up and not taking these equal lows just yet. If we, on the other hand, grab liquidity from the high first, I'm looking into going for those equal lows. Just from the logic is always the same. We're basically just going from liquidity to liquidity. Equal highs or lows always represent a zone of high liquidity just waiting to get grabbed, and as such it is dangerous to, for example, have a position open for a long time using equal lows as a stop loss. So I'm waiting for one of these guys to be taken out, have a reversal signal, a reversal structure set up, and I will basically then target the opposing liquidity. This zone, one thing that I forgot to mention is that this zone over here that I have marked out as an old daily range, it might be relevant as a place of support and resistance, just because, for example, on the 28th of February we basically just tapped that point of control range. It reacted one more time after that, still reacted when we were dropping, and when we did this final drop and pushed up, that's when we stopped the correction as well. So I'm expecting this to have some sort of reaction too, and for you guys to understand where I got that level, all I basically did was to draw a range. Let me just delete this one. Just draw a range from where it begins to consolidate to where it ends the consolidation, so where it stops or gets out of the range. So the range is something like this or like this, for example. You don't have to be super precise because it won't change much, but it's important to be inside the range and not include the breakout candles. And this is relevant because not only the value area high is the weekly and daily level, so that level is of high confluence, but also the POC is where we have another small range, a daily order block. So all of this is very important, is a very important zone, fragmented into levels, right? So essentially this is what I'm waiting for. Any liquidity grabs from the previous sessions of yesterday, the London or New York session, going into those equal lows, or the other way around, so coming back for this liquidation levels, monthly level, equal lows, etc., and which would put us in the golden pocket zone, and from there, if we go here first, target those equal highs, possibly a new all-time high. I will post most of this in our Discord, so if you have any questions, you can either comment on the post there, or just tag me on the Bitcoin channel. I hope I hope this helps you guys. If you need any questions, if you have any questions, I mean, just ask them on the Discord. So, oh, just one last thing. Let us just see if those liquidation levels are still relevant, or if they did change during this consolidation that we're having. Let me just change a setting here. So let's see, down here, yeah, most of these levels are still the same. 62,498, 61,836, I think they're the same, exactly. The biggest ones here are now on the range and the low that was created. So 64,599, let me update that. $64,599. So that's basically that London low, right? And we have 63,280. 63,280. This should take us, yeah, to that range. I wouldn't expect that range to hold, to be honest, just because it has those equal lows. This is a very poor low in the sense that it's a bad pivot point, at least on the 15-minute and below. And let's see, to the upside, 68,008. This is low leverage, so 68,008. Okay, that takes us to that TR pocket once again, and those equal highs. This is what I already had, yeah. Well, let me see this biggest one. Yeah, these are the ones that I already have. 69,160, 69,879. 160? Yeah, okay. Yeah, 160. Let me delete this line. It confused me, you know. 160,879, yeah. So this, for example, I wouldn't expect it to make a dent on a possible upside move. But this one, 71,250, that's an interesting level because it's on a TR pocket deviation. So yeah, essentially all of these levels are relevant. The weekly and the daily levels especially, and most importantly. I do hope that we basically grab liquidity before making a considerable move. Asia did range, so we are expecting London to have an expansion, possibly going into New York, so it would be nice if it is the one that manipulates for then New York to expand. Maybe if we also spend some time here and then SFP this current level, maybe that's already an interesting short to take. So essentially we just have to wait for one of these session levels to be taken. That's all we're waiting for right now. So I'll tell you guys more on the Discord if you need. Just tag me if you have questions. I'll see you guys later. Okay, bye bye.